Hello everyone, Brian from Bear Bull Traders. It's Sunday, January 23rd. This is the weekend video. We'll take a look at what happened last week, look ahead, see what's coming down the pipe this week. It's been a pretty crazy 3 weeks so far into the new year, so let's take a deep dive and see where things might be going. As always, let's start out by taking a look at what happened last week. Markets were down for a third week in a row with earnings. Or responses to earnings kind of disappointing the banks. I think guidance was sort of something that people focused on, weren't too happy with what the CEOs were saying. Of course, if you were watching Netflix on Friday, you saw what a huge hit that stock took on Friday, traded down to around 380 and then bounced back up just under 400 into the close, but big percentage move down. And you can see there all the indexes down. The IWM took the biggest hit of all. Qs were close behind, and even the Dow and the S&P down plus or minus on the 5% light range. But yeah, no place to hide for investors and long traders. The stocks they're the sectors that were the most, that were the best out of the worst. Energy and defensives, red, but still the strongest on the week overall. And the sectors that got hit the hardest were, of course, the tech sector and anything sort of discretionary, any discretionary spending. So again, no place to hide. 10-year Treasury, after it just did a pretty big run up, we did get a bit of a pullback in the last 2 days. So we did finish the week out around 1.75%, but we were inching closer to that 2% level. And of course, that was probably one of the things that drove all the markets lower. US dollar really just kind of came back up to where it broke down from, and now we're just sort of chopping in this area now. So nothing of note with the US dollar, no big move one way or another. And before we go on, this is the advertisement section of my video. It's where I promote my book on Amazon, How to Swing Trade. Routine Strategies of Swing Traders, if you have not checked it out yet. There it is. Okay, so let's start looking at some charts, and as always, like to start out with the treasuries, the yields, because that's where the tail that wags the dog, as they say. And you can see here our 2-year treasury yields are just continuing to go up, although we did have a bit of a pullback last week, and you can see why. We really got quite extended here, but trend is your friend. Trend is still up. And the 10-year, sort of same comments. We did break out from this level here, this 1.75, but then we pulled back and retested it, which is a typical pattern: breakout, pull back, retest, and then continue higher. So I'm expecting continuation move higher unless the Fed come out with some new policy or new stance that might alter this course. But I'm expecting the yields to continue to creep up there. The transports, you can see here we've lost the 200-day moving average on the daily. Did it on volume. You can see back here we do tend to get a bit of a bounce after a big sell-off on volume, and volume was pretty heavy. You can see here the volume here about the same, and we did get a reversing candle. Unfortunately, the Friday candle was not really a reversing candle. You'd like to see a long wick to the downside and then a close at or near where we opened, which was not the case. We closed out the day pretty close to the low of the day on transports, which probably tells you we may have maybe more of a capitulation day on Monday. Then there's the transports, the weekly, again, sort of still selling off there. And the Dow sort of following things down as well. Ugly week. Not a volume day like this day back here in December. We had a big sell-off, but again, fair volume, but not sort of capitulation levels. We are getting really oversold on the stochastics and the RSI. So there is probably a bottom here next week somewhere, at least for a temporary bounce. Again, the Dow on the weekly, you can see your volume dropping off a little bit. So maybe not as enthusiastic selling as some of the other indexes like the Qs. You can see here some very enthusiastic selling here on Friday and really took us right down to this low back in October. So we're right back down to where we started out in October. And you can see here volume building on the weekly as opposed to the Dow, which probably represents more value as opposed to growth, which is where money is probably rotating right now. You can see here stochastics heading lower, RSI heading lower, Q's still under pressure and probably will continue to be. The SPY, again, big volume day Friday, lots of selling, went out near the low of the day and getting really into the oversold area, and again looking for a bit of a bounce maybe next week. RSI under 30. And let's take a look at the IWM. Again, IWM really breaking this this sort of 210, 212 areas. You can see here just totally lost it when Tuesday, Wednesday, Thursday, Friday. Friday, huge volume day. Again, I would if this candle had closed up or at or near the open, or even gone a little green on the day, this would have been a great reversing candle on such huge volume. But unfortunately, that's not the way we went out. Stochastics are looking very oversold here, and so is the RSI. So again, expecting at least a bit of a counter trend rally sometime next week. And you can see the weekly here, volume has been building to the downside. IWM has a lot of companies in it that do not make money, so that's one of the areas that's been challenged for sure. People pulling their money out of companies that don't have any real earnings, or are losing money, and they're putting them into companies like shifting them into places like Caterpillar and Boeing, people that are making things and showing a profit. So that's where some of that action is being driven. So you can see here the dollar, as I mentioned, down early in the week, but we came back up and basically just chopping in a range here for most of the week, and we seem to be sort of settling in. Momentum isn't really going one way or another on this. And the VIX had a big pop up on the VIX on Friday, and you can see here we are getting up into an area where we've revisited before, which gives me some belief that at least we're going to get some kind of a counter trend rally here in the coming week. So let's take a quick look at some stocks that you might want to keep an eye on if we do get a counter trend rally next week. Good to have this list ready so that you're ready to pull the trigger. Apple obviously is a company, solid company, solid earnings, and again, it's been sold with everything else. There has been no place to hide in this sell-off, but you can see here stochastics really getting oversold here, and this is something I would expect to turn around and at least have a nice get a nice bounce back, maybe to the 50 moving average. Keeping an eye on Apple. AMD is another one. We are coming down into an area where there's been some support here, around 115. So with some resistance here, a little bit of resistance back here. So again, watching AMD, possible bounce. BRZU is really going to be beneficiary of oil, and also anything related to emerging markets if the US dollar sells off, so something to keep an eye on there. DWAC, I was hearing this is one of the most heavily shorted SPACs. It's like 13% short interest on this. Kind of interesting. So it had a nice run up from the 60s, got almost, well, it actually did get over 90, and now we are pulling back here, but interesting to hear that was heavily shorted. Facebook's another one that'll bounce back. I mean, there's a company again making earnings. A lot of negatives out there, but again, getting really oversold on the stochastics, and this is the kind of area where you look for a turn here, just like we had back here. We had one sort of back here, although it wasn't much of a bounce, but when these stochastics turn back up, you can get a nice rally. Gold had a really nice breakout, and then I got rid of a lot of my gold position on this pop, because when you see a candle like this, especially with gold and silver. Invariably, you get this massive pullback. So we did get a pullback right back to an area we sort of broke out from, which was this 31.75 level. So I'll be watching this one, and we'll see how it responds on Monday if we do hold this level. And we may head higher if we start to break down more. Then we're going to be back into this range here. K-Web, again, we just seem to be chopping. A couple of hollow filled candles here, trying to break out, can't do it, pull back. Everything again sold on Friday. We had a pop-up on Thursday with the Chinese government loosening or dropping yields, dropping their rates, and the response to that wasn't positive. I mean, if that was news that would have been taken positively, we would have finished up on the day. Instead, we opened higher and closed lower. So still a gap up, but again, not very constructive. And of course, with everything else going on in the market, it just got sold. There wasn't no place to hide, as I keep saying here. Lucid right back down to an area where there's been lots of support here. So watch for that one to bounce. Silver's had an amazing run up here. We had an ABCD pattern, another pop up, bit of another ABCD pattern maybe going on here. So I'd watch silver for a continuation move. You can see there it just failed literally at the 200-day moving average on the daily. And again, semis really taking it on the chin with the selling in the tech sector. Tesla, here's your 900 level. That looks like a possible gap fill right there. And this is an area where we've held support before. We got a prior gap fill. And we may be heading back to this 900 level. Now, remember, Tesla is reporting this week, so there'll be a lot of eyes on Tesla, and options will be extremely expensive, is what I'm guessing. Natural gas had a bit of a bounce Friday. It came back down, checked back to where it broke out from. And so again, keep an eye on natural gas because it's sort of a do or die area right now. Oil is taking a bit of a break here. A lot of people still think there's more upside to the price of oil, and so maybe just going to do some consolidation here after this big move up. Financials, again, as I mentioned, financials have really taken a bit of a hit this week. Some of the earnings reports, bad guidance, and so we really got beat up here. But we are down into an area where could be some support. There's the 200-day. We are in a rising interest rate environment. This is when the banks actually typically do fairly well. So possible area to watch there. And ZIM is it's been again uptrend, ABCD pattern, maybe another ABCD pattern here. Watch for a bounce back here again if we get a bit of a reversal. So this is a shipping company. Okay, so let's wrap things up. You can see what we're going to look at next week. I think we are getting close to a possible counter trend rally. Rally's obviously been down. We're looking for a possible reversal here sometime during the week, but Monday could be an ugly day as well. But look for a reversing trend. I keep lowering these support numbers for the Qs, the SPY, Dow, and IWM. IWM, obviously, as we mentioned, did lose that sort of critical 210 level. We may come back up there if we do get a bounce, but then that'll become resistance, as I mentioned. Big economic events this week. I would say the biggest one is going to be we've got an FOMC meeting coming up this week. We're not expecting any rate hikes, but certainly if there's any more sort of hawkish talk, about being more aggressive, raising rates, or more aggressive tapering, that won't play well with the market, but we'll see what happens there. Again, that'll be something to watch midweek. And of course, we got tons of earnings this week. I only put a few up here. Microsoft on Tuesday, Boeing on Wednesday before the market opened. Of course, Tesla after the market closed. And then we got some other big ones coming up Thursday and Friday. Didn't bother mentioning those because we'll do a Wednesday video. So Anyway, yeah, packed with earnings this week, so that'll probably be the focus. So anyway, keep it green, everybody. Hopefully you've got some dry powder to put to work here. Just watch for a possible doji candle on one of the more of the indexes for a possible temporary reversal. And yeah, we'll see you hopefully tomorrow morning, 8 o'clock. We'll start the show out, Engineering the Markets at 8, and then pre-market show with Norman Carlos live on YouTube if you want to check it out. Or if you're a member, and we'll see you tomorrow and try to trade the open and make some money. Take care, everyone. Have a great rest of the weekend. Bye for now.